Could you please tell us about your view about the Eurozone, the problem, the debt crisis that the region is facing, and how does that shape your strategy of this currency?
Right. I think what it shows is, and what investors had to learn over the past 24 months is, that the kind of analysis of the currencies that you need to do in order to invest in the currencies has changed dramatically. Because all of a sudden the G10 currencies, and here the Eurozone, the Euro in particular, have lost their appeal as a safe haven currency, as a currency where you don't need to do any credit risk, any other risk. So what happens to that now is that all of a sudden the classic currency analysis has moved into something different, where investors need to be aware of political risk. What is the future of the Eurozone? In sovereign risk, is there probably a default or restructuring going on in the Eurozone? And what does that mean for the currencies? So the classical kind of analysis, where you would do your long run fair value analysis and on top the cyclical adjustments, that is going to change, and that has changed over the last 24 months.
Okay, so do you think the euro at the current level is fair? Does it reflect the level that it should be?
We believe that the euro at this point of time is overvalued, that it doesn't really reflect these risks. So that's why we don't like the currency at this point of time. That's why we would short the euro. But that is kind of representative for a lot of G10 developed markets. We see much better opportunities in the emerging market world with the ascending countries.
Why is that?
Because when you look at these countries, what we have been seeing over the past years and months, so to say, that we have very favorable kind of cyclical developments in these countries, where you see strong growth combined with favorable fiscal developments, and you see an undervalued exchange rate. What that has caused at this point of time is that, given this overheating economies and the pegged exchange rate, what you see is a rise in inflation. And that has led now these central banks to adjust their monetary policy and consider the exchange rate as one additional tool to relieve these inflationary pressures. So what we are believing is that what we will see going forward is more appreciation of these pegged currencies than we have seen in the past.
What about in the developed markets? Which currency offer the best opportunity and potential?
Right, when you look at developed markets, there are a couple of countries that share similar kind of characteristics. In that respect, we have very strong cyclical developments in the Scandinavian countries, Sweden and Norway, for instance, and at the same time in the antipodeans like the Australia and New Zealand as well. So Australian dollar, Swedish krona, Norwegian krona are very interesting currencies these days.